So I think by the second half, leading market indicators are all pointing to, and you've got yield curve inversions are all pointing to a second half recession. And, I'm obviously concerned about it being a stagflationary recession. And what the gold price does during stagflation, it does very well. So it's going to be interesting to see how it all plays out here as we go into 2023.
StockPulse.com, we're on location, PDAC 2023. We got David Erfle here, runs the Junior Miner Junky.com. David, good to see you.
Good to see you, Rob. Always great to talk to you.
Yeah, off camera, we've had quite a few good chats here, so let's put some of that knowledge to use here. So you hit me with a truth bomb here, 7-year cycle. Let's get into that.
Oh, yeah, the gold stock cycle. We had a major bottom in 2001 in gold stocks, and then another one in 2008, and then another one in late 2015. And I believe in September 2022, we saw another major low in gold stocks.
Yeah. So I know you're obviously very bullish here. You called the bottom out, so you're, I think, all in here. Walk us through the year.
Yeah, it's been pretty incredible as far as the gold price is concerned. We had a $355 move in about 3 months, and then we had a 50% correction of that move in just a month. And it came back and back tested 1850 resistance, which that was initial resistance, and now it's come back down. I think on some Jerome Powell jawboning today, it's coming back down a little bit, but there's really good support at 1780 and 1800 in the gold price, and I think outside chance of maybe 1750. I don't see it going much lower than that.
Yeah. What any drivers you see, or is this just going to play itself out?
Oh yeah, there's plenty of drivers out there. Unfortunately, we got a geopolitical situation going on, and basically the biggest reason is central banks continue to buy what retail sellers are selling via ETFs. I mean, we had another 31 tons bought by central banks in January. China bought another, I think, 16 tons of that. They continue to shed their U.S. treasuries to buy gold with it, and it's physical gold they're buying, and also. You've got and on the other side of the coin, you've got people concerned about higher interest rates for longer, but all that does is make the debt situation that much more worse, because already this year the national debt's going to have 1.3 trillion of interest payments alone when the Fed funds rate goes over 5% here in a couple of weeks. So. The higher they raise, the tougher it gets for, your everyday average Joe on the street to pay his bills. Their credit card debt continues to go higher. You've seen the credit card rates are over 19% now, and it's just going up. It's exponential. While, everything that they need to feed their family, to pay their car insurance, to pay their groceries, to pay their rent. It's still very high, so it's squeezing the consumer, and these high interest rates that got up so quickly. This is the most aggressive interest rate program in over 40 years, and that takes time to really take its toll on the system. So I think by the second half, leading market indicators are all pointing to, and you've got yield curve inversions are all pointing to a second half recession. And, I'm obviously concerned about it being a stagflationary recession. And what the gold price does during stagflation, it does very well. So it's going to be interesting to see how it all plays out here as we go into 2023.
Yeah. Let's give some advice here, I guess, for the average person here who maybe doesn't have gold and silver in their life. How are they gonna beat inflation?
Yeah. First of all, you try to stay out of debt. I know it's very difficult for people who are out there living paycheck to paycheck, and they don't have a choice, but they have to charge some of that stuff on a credit card. But it's just going to get even more and more expensive, and they're going to get even more and more behind. But the gold price, it's rather interesting how it's continued to go sideways while everything else is going down and the dollar is going up. And as far as the gold price is concerned, I mean, it's doing what it normally does, once it hits a major resistance area. And that major resistance area this time is around $2,000 an ounce. And it's been a resistance area for about 12, 13 years now. And back when gold was rising towards $500 an ounce, that was a major resistance area for about 14, 15 years. But once it finally cleared $500, it doubled. The gold price doubled rather quickly. And then once it got to 1,000, had a major consolidation. And then once it got above 1,000, it doubled rather quickly again. So gold has this habit of consolidating, huge moves around major resistance levels, and then either the government does something or something geopolitical happens, and the gold price starts taking off again. And there's any number of catalysts out there that could do this. Could it be geopolitical? Loss of faith in government, definitely a loss of faith in central banks' monetary policies, because this is the same central bank that's telling us they have to keep raising interest rates because of inflation, that was telling us in the first place that inflation was transitory. So believing central banks and what they're going to do is rather difficult. You believe in what they're doing and not what they say they're going to do. And they continue to say that they're going to continue to raise interest rates. Well, they can't raise interest rates too high because they're just going to crash the system. And that's the last thing they want to do. So what I imagine they're going to do is they're going to have to raise that 2% inflation target that is fantasy land that they think that they can bring inflation down to. They're going to have to raise it to at least 4% at some point. And we all have to suffer the consequences of their actions.
What do you make of the digital dollar?
Oh, that's something that scares me a lot. Of course, all these major central banks are working on central bank digital currencies. It'll just give them a complete control of our lives if our money is all digital. They'll know exactly what we spend, where we spend it. If we say something wrong in social media, or we appear at a protest they don't like, they can shut down our bank account. So and this is something that they can already do in China. So it's going to be very interesting if the people are going to be able to stop this, and hopefully they will.
We made a hell of a case for gold, obviously, and precious metals. So I guess talk about the equities market here. Obviously, it's a little beat up, but you got the bottom in, and I think we're going to have a good year probably, huh?
Well, as far as the gold equities are concerned, I believe so. I mean, we had a washout. We had a classic washout capitulation low last year. After a 7-year cycle low bottom in late 2015, where we had a classic washout. But unfortunately, for the past 10 years, it's basically been a bear market in the precious metal stocks. I mean, we've basically had 6-month bull markets followed by 3-year consolidation bear markets of a huge move that happens in a space of 6 months. So we're all happy for 6 months, and if we're able to take a lot of profit from some of those rhino horns, then it's okay. I've been able to do that for myself and my subscribers, make some money during this, but it's very challenging. We're waiting for that major bottom, and that's not going to happen. This breakout is not going to happen in gold stocks until we get generalist investors back into this sector, because they left the sector in 2013 and they really haven't returned. So, and I think the only thing that's going to get them back is a solid floor at $2,000 as opposed to a 13-year ceiling. So we've had a weekly close above $2,000 in the gold price. We've had a daily close above $2,000 in the gold price. We've yet to have a monthly close above $2,000. When we had that monthly close above 500, gold took off. When we had that monthly close above 1,000, gold took off. I think once you see a monthly close above $2,000 in the gold price, that's when our sector finally gets to party again.
Yeah, speaking about partying here, how do you keep these guys safe, David? It's a jungle out here in the equities market. So talk about you write for Kitco, and obviously you've got some subscribers. So talk about your model and how do people follow you?
Oh, sure. Yeah, I write a weekly column at Kitco, comes out every Friday. And I also have a subscription-based newsletter. Basically, it's an over-the-shoulder newsletter where I offer up my portfolio to all my subscribers. I tell them which company I'm going to buy before I buy it, and I do a long, detailed report about the company before I buy it. And then once I tell them, we all try to get into it at about the same time. So it's kind of we're all in this together type of newsletter. And I don't take any money from any companies, so I have no bias whatsoever in these companies. So if they do something wrong, if I see something on the horizon that's going to hurt our share price from our position where we accumulated, I'm going to tell my subscribers, hey, I'm going to sell this stock, and here's why I'm selling it.
And how do I follow you, David?
You can go to my website at www.juniorminerjunky.com, or you can go to Kitco every Friday where where my column is posted.
Appreciate that knowledge you dropped on us, and looking for that $2,000 monthly close of gold. Thanks, David.
Thank you, Rob.